In this video, I'm going to give you a full breakdown on 1031s. Well, as much as I can. I suggest you go contact a specialist who does this. I'm just a real estate investor about to do my first one ever, so I've been doing a lot of research and talking to some people. Hey everyone, if you're new to the channel, welcome. My name is Chris Ake. Listen, I've been an entrepreneur since 2011. I sold 2 companies. Currently, I own a software development agency called Kairos Digital. I invest in real estate, and I make these videos for fun because I like making content. Been doing it since college. And yeah, I want to share my information with you on my decade-plus journey. Hope you like it. Go ahead and sub, hit the like button. Hey, I'm almost to 1,000 subscribers. It'd mean a lot to hit that. That's like the mile marker 1 in the journey. All right, 1031 exchanges. Basically what we're doing is we are selling a property, taking that profit, and we are moving that into another property without paying capital gains. Well, we're deferring capital gains. So a 1031 exchange is a swap of one real estate investment property for another that follows capital gains taxes to be deferred. The term gets its name from section 1031 of the IRC, Internal Revenue Code. So basically, a 1031 exchange is a tax break for the present. I'll give you an example. Right now I'm actually going through this. That's why I'm making this video, to explain what a 1031 is, some of the advantages, some things to watch out for. So currently, I'm actually selling my first property. The first one I bought. I'm sad about it, but I'm excited because we are looking to 1031 our first property into something bigger. Go ahead and click the link below. I'm gonna put a link to my first deal so you can see the first deal, the numbers, the breakdown. You could check all that out and see how I started in real estate and investing. So what we're trying to do is essentially we need a certain amount of money down to buy this other property, right? So we are gonna sell, we're gonna take the proceeds, we're gonna 1031, put it into this property and buy it. So I didn't know if this was possible. I've never done it before, and I've been talking to a lot of people, found out we could do it, everything is fine. So I started reading more into it. And again, that's why I want to make this video about 1031s, to show you and give you some of that information as well, so you don't have to spend hours and hours like I did Googling the internet, ChatGPT-4, or talking to people on the phone for 30 minutes. So the one thing about 1031s is the money has to be held in escrow, right, by a third company. You cannot touch that money. That should be noted. Also as well, that property, it should be a like-kind property. So again, talk to a specialist who knows the 1031 legal code, but it has to be a like property. For example, you can't sell a property and then go buy a business, which I don't think you can, but it has to be a like kind. That's the whole purpose of it. And also, if used correctly, there's no limit on the amounts of 1031s you could do. So one thing to note as well, by the way, is there's a special depreciation rule. So for example, if you have improved land, right, with a building on it, and you sell that for unimproved land with no building, you probably wrote off depreciation on this previous property. If you do a 1031, and you buy that land, because say you want to do a development on it, what's going to happen is all that depreciation that you wrote off, that is going to count as income, and you are going to get taxed on that. So that's just one little special thing that I found. There's a bunch of little things like that. Again, talk to somebody to figure that out. But I thought that was kind of interesting. Makes sense to me, but basically, hey, if you got this building with land on it, you sell for a vacant land to do a bigger development, you're gonna pay tax on that depreciation that you wrote off. Okay, so basically, as we said, you're just deferring taxes when you sell a property. So usually how 1031s work is it's not a perfect scenario where you sell, you exchange right away. So majority of 1031s are delayed. Now, there are 2 time frames that you need to know about 1031s. So the first one is the 45-day rule. Basically, you sell a property, you have within 45 days to have in writing to notify, to identify the property that you are going to purchase. You have to submit that. Basically saying, hey, I sold this property over here. I've identified that I want to buy this one, and I believe you can do multiple as well. I think up to 3 or so. And you could identify these properties that you want to buy, and that's the 45-day rule. Now, the second timing rule is going to be the 180-day rule, meaning you have to close on that property within 180 days of you selling, then the 45-day identification, then 180 to purchase and close on that property. And if you don't, I'm guessing, again, I've never had this happen, I'm guessing you lose your ability to 1031 and you gotta pay the tax man. All right, and also with 1031s, there's something called the boot. And basically what the boot is, the extra money that is left over that is not used towards buying that property, that is not used to defer those taxes. Let me give you an example. Let's say you have a property that is worth $2 million. You sell that property. You go buy a property for $1.5 million. You collect $500,000. That is the boot. You're going to pay taxes on that $500,000. That's the boot. And one thing that I'm not too sure about that I do want to talk to somebody as well is I believe, I'm pretty sure based on my research, that you could actually, you do a partial 1031. This is called a partial 1031, not a full 1031 exchange, but essentially you can identify the amount of money from the sale, right, that you have. So let's say that you sell and you get $500,000. You could say, hey, I'm taking $400,000 of this and I'm going to put this into the next property. The $100,000 is not going into that property and I am going to pay the taxes on this $100,000. I believe that $100,000 is the boot. I believe you can decipher how much you're putting into the next one to 1031 it as well. Again, that's something called the partial 1031. So in summary, that's a gist of the 1031 program, how it works. It's not as scary as it seems. Talk to somebody, find a local specialist, maybe talk to your CPA. They probably got some good referrals for you as well. I was a little nervous about it, to be honest, but after talking with a few people who've, number one, have done it before and specialists in 1031, they said it's not that bad. The one thing that I will say where you could potentially get in trouble is if you are 1031, for example, let's say that you sell for $1 million profit. Your tax bracket, I don't know, because everybody's situation is different, but you're gonna have to pay some kind of tax on that. Let's call it 25%. So you have to pay $250,000 in taxes. But let's say you do a 1031 of that full $1 million. You put that into another property. Say that property now is a $4 million property, right? Whenever you sell that $4 million property, you have deferred taxes you have to pay, and you still have to pay the other taxes as well. So you have to calculate what that profit is going to be. Again, you could probably 1031 that again and just keep 1031ing it. I believe after that, you put that into a trust for your family and you call it a day. Or you hang on to it forever until you're long gone away on this earth, and you don't have to worry about the taxes from the 1031. But that is something to keep in mind and to consider. If you 1031 into a bad deal, things could kind of get a little shaky and you could put yourself at risk. Nobody likes that. We're all here to make money and to have a good time, right? So that is something to just kind of be wary about. You know, no financial advice here, but you know, I would not suggest 1031ing into something very risky. That's very speculative, right? Even if it's like kind, play a little more safe and build up that net worth over time. Hey, I hope you liked the video about 1031s. I'm about to do my first one. Comment below if you have done a 1031. Let me know what you've learned. I'm curious and appreciate you watching. Go ahead and subscribe if you like this content. I'll see you in the next video.